Hello guys, this is the first part of the 2 videos about pump and dump. In those 2 videos I will talk about what is pump and dump, how it works, how to spot it, and also is it even legal, and how to of course avoid it. At the end of the series we will try to conclude everything and discuss if it is possible to make money on it. So stick around till the end. Now, as always, we will roll a quick intro and then we'll go straight to the topic. So first, what is pump and dump? So the pump and dump strategy appeared long before cryptocurrencies. Presumably, it came from the stock market. It can be explained by the fact that the organizer of the pump and dump operations chooses a low liquid asset with a consistently low cost and artificially accelerates the price, skimming the cream at the peak. Someone considers it a scam, while others, on the contrary, take part and enjoy the excitement. So cryptocurrencies are a relatively new type of asset, but the number of strategies invented for them is already impressive. So the trading approaches can be divided into 3 groups. First one is based on the technical analysis, which means the trading on patterns, support and resistance levels, and Fibonacci. The second ones are based on the fundamental analysis, trading at the start, at the end of the Forex, based on news from developers, etc. And the third one is the ones based on psychology, trading by understanding the principles of the market participants, actions of hamsters and whales. So the pump and dump scheme could be classified as the third type of strategy, but it is better to call it a separate category. Many consider it as a scam. On the internet you can find the definition of pump and dump fraud. And yes, it is, but who said you can't take part in it? The pump and dump is a strategy built on the artificial sharp growth of the cryptocurrency due to the coordinated actions of the participants, followed by a price collapse. Pump and dump can be compared to hype. These are also pyramids in a sense, but this does not reduce the number of people who want to participate in them. It's all about excitement, from which traders get no less pleasure than from a successful deal. So indeed, money is not always the goal. Trading can be exciting, and sometimes the experienced emotions are much more valuable than the money. Said nobody, but I think it just depends on the person. So next, how do crypto pump and dump schemes work? So the organizer or pool of organizers makes every effort to popularize the token. Within a few days, the price grows by 100% or more, and then the organizer collects the profit after selling his coins. Theoretically, this scheme is organized as follows. First, the organizer of the pump, person or a group, selects an asset. It should be a cryptocurrency with a stable sideways trend, which means investors are not interested in it. The coin should cost a few cents and be far from the top, but have an interesting legend behind. Most often, little-known tokens are chosen for the dump scam. Then a coin is bought in small volumes so that there is no premature growth. At the same time, a new background is being formed in the media and on forums. Then the organizers are also engaged in active advertising. They praise the cryptocurrency, predict future success for it, and attract more participants to purchase. At the start of the pump, organizers invest in the assets so that the price moves up. Warmed out by the informational background, traders buy a coin, the price accelerates even more, the demand for cryptocurrency increases. At the peak of the first wave, the organizers partially satisfy the demand of the hamsters and sell a large amount of cryptocurrency. The price moves down, and then the organizers allows the price to drop a psychologically agreeable level and buys the coin again, provoking a second wave of growth. Traders see growth and think that there was just a correction. So the second wave is usually higher than the first, and at its peak the organizers completely exit the market. However, the number of waves depends on the organizers themselves. This is an example of a hidden pump and dump when only the organizers know about the growth. The rest of the participants are simply being used, so be careful if you see unreasonable price of some little-known coin so as not to become a participant in this kind of manipulation. So the crypto community on the net is full of advertisements for charts and groups inviting people to unite, create a pump and earn money. So the organizers of such Telegram channels use the power of tens of thousands of participants and often earn not only on the pump and dump strategy, but also on paid access to their private exclusive chats. Such actions in the stock market, this is where this strategy appeared, are considered fraud. But this is arguable. Each broker warns the trader about the potential risks of losing the deposit, and every trader accepts them. Such traders are driven by the desire for easy money, but they don't perform a detailed market analysis and lack knowledge. They lose money solely because of greed. So who is to blame? In addition, most of the pump participants know what they are involved in. Now let's talk about examples of pump and dump. So theoretically, pumps should have an organizer who coordinates the pump and dump group and provides the necessary information. But there are examples of spontaneous pumps, the unwitting, organizers of which are media people. Such pumps can be called involuntary because it is impossible to prove their intent. Besides, everyone understands that famous people simply do not need pumps. There's no point for them to earn money in such a way. But one fact is undeniable. A few words are enough to pump unpopular cryptocurrencies. So now we will discuss a couple examples of consistent and media pumps in the cryptocurrency space. So first one, eCoins. So on February 6, 2018, the little-known cryptocurrency rose in price by 4,742%. It took the cryptocurrency startup just one day to break into the top 100 from the last place in the top 500 in terms of capitalization, and even enter the top 20. So interesting to note, at the time, the cryptocurrency market was in stagnation. Bitcoin even tested a support zone falling below 6,000. So why would people invest heavily in such an unattractive project? There was almost no information about this coin, not to mention the interest from investors. The latter is confirmed by an almost perfectly flat schedule for 2017. Even during a period of a powerful surge in the cryptocurrency market since the spring 2017, no one cared about eCoin. So, second is Quark. This is a good example of a two-wave pump. The project itself is of little interest to anyone. It was supposed to be yet another analog of Bitcoin, but investors quickly forgot it, as evidenced in the price chart. Next is Ucash. This is not quite a pump, but this example is worth mentioning because the nature of the chart and the psychology of traders are identical here. So, as it often happens with startups, at first it actively grew. Scalpers attempt to capitalize on the hype around the new project. Then the price collapsed and the second wave of the pump followed. Usually, after the first recession, the project is no longer interesting to anyone. Here we can say for sure, someone, most likely developers, implemented the pump and dump tactics. After the second wave, the price of the coin went down, and as you know now, that was quite predictable. So, the fourth are the power of Elon Musk's words. So, Elon Musk has repeatedly proven his influence on the cryptocurrency market. But if the local price shifts on the BTC or Doge are more of a fundamental reaction to Musk's announcement regarding these coins. The following examples cannot be explained otherwise than by a pump. Here you have the example, the Santa Floki. At the end of the December 2021, Elon Musk tweeted a selfie with his puppy named Floki, whom he dressed up in the New Year's costume. It is difficult to say how users were able to associate ho 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 with this fact, but the cryptocurrency worth 65 Satoshi of USD grew by more than 5,000% in a few hours, and it collapsed just as quickly. A few months later, the project was completely removed from the listing, but someone managed to make good money on it. So it is worth noting that Elon Musk's puppy acted as a pump driver several times. In September 2021, his mere appearance in the family of a billionaire led to a spontaneous growth of 1,300% of the Shiba Floki, the Floki coin. The name of the puppy was invented back in July, so it is unlikely that such a rapid increase in the coin's price of a coin with a rating below 2,000 could be associated with Musk's desire to make money. So now Vikings Chain, the Viking Swap and Space Vikings are also notorious examples. In early November 2021, these coins went up by 350%, 3,700% and 600% respectively after Musk posted several tweets about the moon and the Vikings. Elon suggested that the Vikings were the first to land on the moon. Did he relate to these coins? There is no evidence of that. However, the coins which are in no way connected with either the moon or the mask have risen sharply in price. But you should not confuse a pump and dump with natural volatility. So now let's observe the example of the Tron cryptocurrency for you to see the difference. So at first glance, we see a pronounced pump here, but it is not. Please note, the coin is in the top 20 in terms of capitalization. To pump such a token, that is to influence the cryptocurrency rate, you need a lot of money and institutional investors, i.e. the whales. And the second point, the growth of the coin coincides with the uptrend of the entire cryptocurrency market, the capitalization of which in early January exceeded $850 billion. Below, there is one more example of how price spikes after the statement of famous people, but it's a rather natural growth than a pump. At the end of the October 2021, Mark Zuckerberg announced the rebranding of Facebook Corporation to Meta, with a corresponding change in the company's development strategy. So the metaverse segment was chosen as the main goal. They started building a metaverse based on the virtual and augmented reality technologies. Similar startup of a smaller scale already exists, especially in the cryptocurrency world. Crypto metaverse users buy and sell virtual land linked to NFT tokens and even issue mortgages for such lots. It is logical that some metaverse-related coins immediately grew in price, and those projects were Decentraland, Sandbox, Metaverse Miner, Metaverse, and Metaverse X. When we compare the two charts, the Mana, which is the Decentraland, is one of the leaders in the Metaverse segment. After a sharp increase in the startup's popularity, a correction came, but even after a few months, the price has not returned to its previous level. Therefore, we are not talking about pumps here. Next is Metaverse Miner. We see a clear pump here, a sharp rise followed by a rapid fall below the original position. Metaverse Miner is an unknown junk coin, we can say. The growth of its value is a consequence of the general hype on the wave of the metaverses, which passed relatively quickly. Both on these charts show that the same fundamental factors can cause both price growth of a promising cryptocurrency and a pump. In the first case, a long-term investor can earn. In the second, he will lose his money 100% probability. Unless he manages to withdraw money before the cryptocurrency dump. Okay, I guess that is the end of the part 1. Hope you like it, get something out of it, and of course subscribe with the bell to get notified when the second part comes out. Right now, thank you for watching and goodbye till next time.